this is the money I was going to leave to my grandchildren when I pass away. This is the money that was for Junior's college fund. Or, oh my God, my account's blowing up. That creates that panic. That panic leads to capitulation, selling. Oh my God, I gotta get out while I still have a little bit of money left. This is the chart of investor emotions. This applies to the entire market. It also applies to traders. So think about it. Did your research. Did all your research pre-market or whatever it was, and come up with an idea. Market opens, you execute the trade. How do you feel at the moment that you're executing that trade? You might feel a little nervous, but mainly what you probably feel is optimism. I like this idea. Did the research. I just executed the trade based on my expectations. I feel optimistic. And then maybe that trade starts to work out. How do you feel then? Well, when you start seeing your P&L go up, it's a natural feeling to start feeling a little bit excited. And then maybe you get this big move out of it, right? Maybe you bought some of those trades that we talked about right off the open today, and we got these huge initial moves. And oh my God, when the market was that high, it was at like 11 a.m., I can't believe I bought this stock for 20 cents risk at the open, and now I'm like multiple dollars in the money. It's almost thrilling. And then when you get that next leg up, maybe one more leg up in the market, like euphoria, this is when you're like, I'm the greatest trader in the world. I am like so amazing at trading. Like, you know what my mistake was? I should have bought even more in the beginning. I can't believe that I only bought 400 shares. I should have bought 4,000 shares. I can't believe that I only made $1,000. I should have made $10,000 in this point. That was my big mistake. But you know what? I'll just add now because everything I touch works. Everything I touch turns to gold. What is that? Midas, right? And then the market starts to decline a little bit. And when the market starts to decline a little bit and your P&L is not at highs anymore, you can start to feel a little anxiety about it. Market declines a little bit further, denial starts to take over. These three right here, I think, are where the biggest mistakes take place. Because denial is what has you take your stop loss out, right? Oh, I know that I'm supposed to implement those trailing rules that we learned in the class, but this is a really good company and it's just a temporary setback. I'm pulling that stop out, and that's denial, right? Euphoria. You start thinking you're God's gift to trading, and you start adding at the wrong times. You start really pressing things at the wrong times because it seems like everything is working. And again, this denial is when risk management really goes out the window. So I think a lot of the biggest mistakes occur here. And then when you get rid of your risk management and you pull at your stop loss and the stock goes down further and you don't have risk management in place, that's when you start to feel fear. You're feeling scared. Oh my God, especially if you add it up here. Because at this point, even though it's probably above your initial buy price, you might be losing money, or you gave everything back and you're getting really fearful because you don't have a plan anymore. Why don't you have a plan anymore? Because you got rid of your plan. What am I going to do if this trade doesn't work out? So you kind of continue to hold and you continue to hope, and you're a little scared and you're like, please, please let the market go up. And what's the market going to do? It's going to go down. And when it goes down more, you're going to get desperate. And when it goes down even more, then you're going to panic. This is what everyone's looking for in the market right now, by the way. And we haven't really gotten in this pull-in that everybody was kind of debating in the afternoon meeting. We haven't really seen panic and capitulation come into the market yet. It doesn't look right to me. It doesn't look like a real low. But you don't necessarily have to have that to have a bottom, but it is oftentimes there, especially when the market moves down this fast. But anyway, once you panic, because now when you hit this point, you're like, oh my God, like this is the money I was gonna leave to my grandchildren when I pass away. This is the money that was for Junior's college fund, or oh my God, my account's blowing up, or whatever. That creates that panic. That panic leads to capitulation, selling. Oh my God, I gotta get out while I still have a little bit of money left. I'm almost broke. I gotta get out, and you're out. And then at that point, you're just completely despondent. You know, screw the market. It's manipulated. It's not fair. I'm never going to buy a stock again. And that's usually when the bottom comes in, the cycle can then more or less repeat itself. Really important, right? Everything I just said here, what was I focused on? Me. What should you be focused on? The market. That's exactly right. Like I said earlier, listen to the message of the market. Don't listen to your own ego and your own emotions. That's why it's so important, to go back to what I was already saying, to have a plan in place, to have rules. The rules breed consistency. Because otherwise, it's very easy to fall into this trap. Every decision that the person made here was based on how I felt and not what the market was actually telling me. And in reality, this was the place of maximum financial opportunity. That's where you sold. And this is the place of maximum financial risk. And that's where you are adding or buying, right? So this is like my all-time favorite chart, the chart of investor emotions. We're all subject to it to one degree or another. It's just why, in my opinion, it's really important to have rules in place, because rules are the counter to emotions. If you have a game plan written out, and I get questions all the time. A remote trader just emailed me last week, and she said to me, you know, I have a problem. I come up with these great ideas, and then like the market opens, and I just don't, like, I get scared, and I just don't press the button. Like, do you have any suggestions? And my suggestion was, write it down. Write it down and say, my plan today is, if this stock does this, I am buying with this out. And now that you've written it down, you have to do it, because it's there. Just follow what's in the notebook. Keep it simple, stupid. Just follow what you wrote down. That can be a counter to that. So again, we all have these different weaknesses, which is probably the next thing I'm going to be talking about. No, I'm talking about patience first. We all have these different weaknesses that we have to work through. Patience. I'm a big believer in the following expression that you're probably going to hear me say if you haven't heard me say it already. Buy the ticket, take the ride. I hope that no one here is the type of person who would spend money and then wait like in a 4-hour line for a roller coaster. And if you're at Six Flags, you're going to hit King to Cop, front row, waiting in line for hours and hours and hours. And all of a sudden, you're finally next. And you're like, nah, you know what? I can't do this, too scary. Right? You spent all the money all the time, and now you're just going to walk away from it. I think that applies to trading. In an ideal world, an ideal trader would be able to look at a trade after they already have the trade on and go, you know what? Things changed, and it's not the same as it was, so I'm out. I've never met the ideal trader. I haven't met that person yet. And what I can tell you guys is that if you find any trade, I can almost guarantee you that I can find at least one reason why that trade's going to fail. At least one reason. There might be 200 reasons why it should succeed. I can find one reason why that trade's going to fail. Now, what's very easy to do as a trader is to become very honed in and focused on that one thing that might be wrong. And then as soon as you do that, you end up hitting out of the trade. So I think, you know what? You already took the trade. You already put the risk on. You already potentially could have taken that entire loss. Let the trade play out. Let it see if it's going to work in your favor. Because again, I don't think any of us are this perfect ideal trader who can magically, re-execute every single time the slightest thing changes and they know that their trade's going to fail. I never know when I'm first getting into a trade. I never know if that trade's going to succeed or fail. And it doesn't matter, right? It's about risk, reward, and probability of success. So you want to be patient. Going back to the probability class that we did. How many layers of probability are on your side? Those are the questions to be asking yourself when you're executing that trade. Is the trend of the market on my side? It's also important to know when to trade. There's some days, this is one of the reasons why I love being an equities trader, by the way, as opposed to like being a futures trader. Not that there's anything wrong with futures trading. I think that on some mornings, I always try to, in the morning meeting, kind of give you guys my idea of my expectations of what I think the market's going to do. Sometimes I walk in and I look at the market and we're gapping up or down a little bit, and I don't know. It's a coin flip from here. Well, if I think it's a coin flip from here, what should I be doing? Probably not very much, right? One of the cool things about the equity market is that even if the entire market itself, the S&P 500, maybe is opening as a coin flip, I've got access to some 5,000 plus stocks. There's most likely always going to be at least something out there that has earnings, has news, has an upgrade, has a downgrade, has something that I could focus on to still get some edge for me. But sometimes if there's no clear direction, if there's a 50-50 chance more or less that I'm looking at, some things are telling me it could go higher, some things that are telling me it could go lower, which is honestly how I feel about the market in this very moment at this close. The answer is I don't know. And if I don't know, I need to be patient and let the market tell me what it wants to do, and it'll give me the right signal in time. And that's when you want to preserve capital, right? It's very, very easy. I see the new traders do this sometimes. Maybe there was a big move in the beginning of the day, and now it's the middle of the day, and nothing is going on, and the market's consolidating, and they're like trading and trading and trading and trying to make up for the fact that they didn't execute trades properly in the beginning of the day when there was a lot of opportunity, and now they're just taking losses. So you are in a time of uncertainty, a consolidation period. Just sit on your hands, be patient, don't trade, it's okay. What I tell traders is this: when there's a lot of opportunity out there, like I kind of think there was this morning, you need to be really active. You should have been really active this morning, really aggressive with your trading, because it's the only way you're going to make money is when there's opportunity and you take advantage of it. The opposite is also true. On certain mornings when there's much less opportunity, you should trade much, much less. In an ideal world, and again, it's not an ideal world and none of us are ideal traders, volume that a trader does in a full day should be heavily dependent upon opportunity. My personal trading volume has gone through the roof since the market broke down. Through the roof, like massively higher. And that's because there has been so much more opportunity than there was when we were kind of just in that grind for a long period of time and there was nothing really going on. So be patient during times of market uncertainty. If you're interested in becoming a prop trader with T3 Trading Group, click the link in the video description.